Hi, everybody. My company was a very rapid growth business, long-term, high growth. So I invest, but I also help companies scale. Related to the cannabis industry, I'm in really big deals and small ones. I'm in a company that went public. I'm in a multi-state operator that hopes to go public end of this year, early next year. I'm in multiple smaller investments. Right now I'm digging deep into a large-scale hemp investment, so I'm in really all the different facets of the industry. I'm in multiple slices of it, large and small, as an investor, and also an investor group. Often I'll bring a group of investors to a specific deal or opportunity. Probably 20% across the country and 80% Michigan-centric. So that's kind of my background.
Great, yeah, thanks, Bob. I'm Joshi, the CIO at Rose Capital. By way of background, I spent, prior to the cannabis industry, about 15 years in a variety of different roles in institutional investing based in New York. So first in investment banking, spent some time in private equity, and then in the public markets as well. Became interested in cannabis, I think like a lot of folks here, several years ago. And at Rose Capital, we've been pretty focused on the industry really for the last 5 or 6 years. Our activities tend to focus on really 3 sectors: consumer brands, software and data businesses, as well as logistics and ancillary companies.
So we thought we'd start with a little bit of an overview of our perspective on the industry. So you have more of an institutional player and a private investor player that are very active in the industry for multiple years. So we thought we'd just give you our 2 cents on the overall industry. So you want to kick us off?
Yeah, sure. I mean, should we start with Michigan specifically, or
sure?
Okay, wonderful. I think Michigan is a really exciting market. For just a variety of reasons. The first of which, from kind of putting the investing hat on, is that we look at it as a major market. Population of about 10 million people or so, and I think if you run just some basic kind of volumetric metrics about population, penetration rates, we certainly would agree that this is a market that in the next few years could easily sort of eclipse $2 billion. And I think if you look at kind of where Colorado or California, some of the other kind of a little more mature markets are at, I think certainly $2 billion is probably a conservative estimate. And I think we'd see much more growth than that. From a personal standpoint, our firm is really excited about this market. We have Roger Clower, a member of our team, actually, he's in the audience. He lives here. Jonathan Rosenthal, one of the co-founders, also lives here. We have a lot of connections to the state. Me personally, I actually spent my very first professional years in the state of Michigan working with distressed auto suppliers quite a bit. And I think Michigan is a state which has been just an industrial pillar of the economy for the United States, and I think it's really exciting for us to be able to see kind of the birth of a new industry in the state and all the jobs it brings with it, the commercial activity, the tax revenues, and it's just an exciting time for us.
So I'd agree on the Michigan market opportunity. I've looked at the whole country as an opportunity, and some people say California, because it's such a big economy. I really believe Michigan's a better opportunity for investors myself. And I say that for the reasons mentioned earlier, but also a number of other ones. So we have 340 or 50,000 patients, 30,000 caregivers. So we already have a huge ecosystem in the industry. And then you add to that the part that I think most people miss, and that is tourism. So we have double the number of tourists as Colorado. We have a huge tourist influx annually, multiple times for the different seasons, for boatings and cottages and hunting season and so on and so forth. So that's an element of it with recreational kicking in that I think is on some people's radar, but most people are missing in terms of the opportunity Michigan represents.
Yeah, it's really interesting you mentioned that. I mean, we look at New York quite a bit as well. It's kind of a state that's very proximate to us. We're based in Greenwich, Connecticut. The population of New York, I think, is something like twice what it is of Michigan at almost 20 million people. And yet Michigan has something like 300,000 patients relative to, I think, 100,000. And New York is just getting to that level now. So it certainly seems like a state where it's a much more accommodative to the industry.
Yeah, agreed. Yeah, and I guess another perspective on the Michigan market, which kind of segues to the investment side of it. I started really researching this probably 4 years ago for first looking just for passive investment opportunities. And even back a year and a half, 2 years ago, as I talked to different people who are pitching deals that are Michigan-centric, it was such a comedy in many ways. Some of you remember the show Everybody Loves Raymond, a very popular TV show. Back in the height of the dot-com days, the tech bubble for the dot-com days, I was in New York talking about this giant deal with a gazillion-dollar market cap because I was in tech. And that night, I'm thinking how unreal this is in the meeting all day long with these giant hedge funds. I go to the hotel room and I turn on Everybody Loves Raymond. And the episode that night was making fun of the dot-com boom. And the short version of the story is Raymond gets a job at a at a dot-com, a new dot-com. And their big claim to fame was they created pancakes.com because, well, everybody likes pancakes. And they got a $2 billion market cap, and that was kind of the punchline of the show. And that was really what it was like here with cannabis deals for most Michigan-centric operators. People from out of state who had been in the industry longer had a little different perspective. But I remember sitting in a pitch, and they had a very pretty PowerPoint about how big the market was. And then they claimed to have the dream team, of which nobody had any cannabis experience, by the way. Not a single person had any cannabis experience. And literally it said dream team on the slide. They had a valuation of some giant number. I don't remember the number, but I remember like almost laughing when they told me it. They had no facilities, no real estate, no building. And the valuation was like $50 million or something. I'm like, so that's kind of what it was. What you're seeing now, though, is you're seeing some real players emerge. There's still some of that going on, but you're seeing some professionals come together. You're seeing some real combination of cannabis expertise, the financial wherewithal, as well as the ability to get licensed and execute on a business plan. You're seeing a lot of that come together now. So you're still seeing some of the goofy stuff with pancakes.com. I see one every week, but you're seeing some quality deals presented, and I think there's still tremendous investment opportunities, whether it's a $100,000 investment into a single store dispensary or a $10 million investment into a large enterprise scale opportunity. There's still deals like that every day that are quality out there, and I think the difference now is you're starting to see, instead of everybody talking about what it's going to be like, you're seeing the people who know what they're doing actually execute.
Yeah.
You know, people who have already assembled groups of 10 and 20 stores or 50,000 square feet of grow or whatever the segment of the market you're in.
Yeah, I mean, there's no doubt that the pace of just, I think, evolution in this industry has been so rapid, you know, relative to at least when I started looking at it a few years ago, and kind of where we are today. I mean, just the sophistication of operators, you know, really adherence to kind of SOPs and kind of compliance and all that. It's something that we care a whole lot about, but I think it's something that we're seeing, you know, the industry gives a lot of respect to as well. And I think that's really good because, you know, we have an opportunity to sort of do it right, you know, kind of from the get-go. And I think the cannabis industry, you know, whether you're here in Michigan or just sort of more broadly speaking, is definitely held to a higher bar when it comes to things like safety, you know, child-resistant packaging and all of that. And I think the onus is on us to kind of, you know, do it right from the start and make sure we kind of set the tone correctly for the whole country. Yeah.
Well, and I think it's a good point, too, in terms of regulation and compliance. I think that's what you'll see personally in the next wave of kind of shakeout. So there's a lot of people operating now who can't maintain a compliant operation over time. They're going to have crop failures, they're going to have pest issues and products that don't pass, and even production issues. A very large percentage of the people in the grow side of the industry in Michigan have a great caregiver who did great doing 72 plants. And of course, but by the way, he's got the best product, the best quality stuff, and is the best grower in the industry, right? Because everybody's got one of those. And that's almost nothing to do with running a commercial grow operation. It's apples and oranges. And it's the same thing really with every part of the food chain. If you look at a lot of the vapor pens, for example, that are prevalent. Well, first of all, about half of the stuff on the street is still illegal. It's getting cleaned up now, but looking backwards last year. So you got stuff from other states, right? You've got people filling with very manual processes, and they ordered 500 pens on eBay, and they're filling them up in their basement, right? You've got all kinds of different things like that going on today. And what you'll see is this market in Michigan professionalizes and gets more like the established markets. Is they won't be competitive. You know, their cost of goods won't be the same. You know, the larger players. Again, full disclosure, I'm an investor in Slang Worldwide. They went public, but they've done 2.5 million cartridges. Right? So they're buying a little bit cheaper than the guy doing 500 or 1,000 or even 10,000. Right? They know what they're doing, and you're going to see that kind of disparity between the people who know what they're doing and don't. And right now, everybody can make money, but over the coming years, you're going to see that gap come up, in my opinion.
Yeah. Yeah, I mean, I couldn't agree more with that. You know, we've certainly studied and spent a lot of time looking at kind of the adjacent industries to cannabis, whether that's been, I think a lot of people look to kind of tobacco originally. We've actually tried to really study big alcohol in some ways. And you look at the kind of where beer manufacturing is as an example. I mean, the top 5 brewers in this country account for what, like 90% of market share.
Right.
And it's just, I think that's certainly where the puck is probably headed, but the journey to get to that point it's going to be an interesting one, and it's going to take a long time.
Yeah.
And a lot of capital too.
Well, and just to echo that, the difference in this versus big alcohol, and I guess alcohol has some of the same things with statewide licensing, but the licensing issues and the nuances to each market are so different that I really think the efficient way for a lot of people think the efficient way for the big guys to get in whenever they're ready to get in is going to be through acquisition. It's so clumsy and inefficient to get in. Now, they may come in, clean house, and do something different, but the minute that it's federally legal, I think you're going to see just a huge wave of M&A from whether it's alcohol, tobacco, consumer packaged goods brands, you name it. I think there's going to be a tremendous amount of consolidation, and that'll benefit investors. Really, it should benefit investors at every level, right? If you invested in a single store operation with one retail location, well, they'll probably get bought up and consolidated into a 10-store group, and 3 10-store groups will get bought up into a 50-store group, and that 50-store group will get sold to somebody who's big, right? That's probably how you'll see it all shake out over the coming years.
So who do you think are the, I think you mentioned the logical parties here, but as federal legalization comes, or maybe it's some other event, but what do you think it is that sort of draws, big businesses outside of the cannabis industry into our industry?
New is probably the biggest thing. It's a new category, is probably part one. And to me, the difference with the cannabis industry as compared to other emerging markets. So like in the tech, I rode the whole tech thing, right? I was in the tech industry. I mentioned the pancake.com story. The difference there is the general investor, whether it be a person or even some of the medium-sized investors, meaning putting in millions of dollars in, they really often didn't even know what they're investing in. It was tech, right? It was something.com. I should do this, right? Everybody's doing tech. Tech's going great. My friend doubled his money, and they did that. So this has some of that element. There's the green rush. Everybody's trying to make a buck at it. To me, the biggest single distinction in this market as compared to those other big booms is that in my opinion, you're taking basically, just if I'm being candid, a huge illegal market, and you're shifting it to be a legal market. Right? That's the difference. So at the same time, you have demographics where people who were more comfortable with marijuana products are saying, okay, it's legal now, I'm going to get back in and I'll do it more openly. And you're seeing more products like cannabis-infused beers and all these different types of ways to consume the product that's not as obtrusive as I'm going to roll a joint and smoke a joint at a party. So you're basically taking this illegal market, you're shifting it to a legal marketplace for the most part, and you have an increasing number of people trying and using the products on a routine basis. I talked to a friend yesterday who told me, hey, every night vapor pen helps him sleep, right? It's not like it was a few years ago or 10 years ago or 20 years ago. So that shift is very different than other emerging markets.
Yeah.
It's not, wow, if I build a website, will they come, right? Will people buy online, right?
Yeah.
It's not that at all. It's I used to hide it, now I don't have to hide it.
Yeah.
I used to get it from my friend who has a friend who had a friend. Who knows what I'm getting? Now I can get the stuff legally. So it's a different animal,
Yep.
and it's got the same type of math to it in that the winners are going to be multi-billion-dollar market caps, and there's going to be a lot of money to go around.
Yeah, I mean, I think that generally resonates with us as well. We've, speaking of, I guess, cannabis brands, I mean, we've given this, this topic a lot of thought, and I think for us, one of the really interesting things about just how the industry has evolved is that when you look at, brands, the industry, for years was sort of a flower industry, right? Mm-hmm. And then now you've kind of got, vape pens have come into the mix, even before it really became legal. And now, I mean, there's just so many different delivery mechanisms, whether you think about, some of the things we're doing at Mary's with, the transdermal patches and, the muscle freeze product, or, even edibles, beverages, as you mentioned. There's, I think there's just such a huge swath of options out there for the consumer. And I think really the next few years the key is going to be about figuring out, sort of where does that mix shift ultimately kind of fall out in terms of, there's a lot of customers that are really interested in cannabis, for example, but have no desire to actually combust it, right? Mm-hmm. But some people don't love edibles because there's issues there. And so That's, I think, a question that we're always trying to figure out is what's sort of the ultimate mix, and it definitely varies by market too. Any observations you guys are seeing in the Michigan market on that front that the kind of?
Yeah, I agree. The variety of ways you can test try to the market, so to speak. If you're a consumer new to the market, the ways you can now try it have increased dramatically. So that's like a softer way for people to get into it. There's sparkling beverages on the market now. Again, you name it. There's a new pitch every day about some other, teas and coffees and you name it. So I think it's a lower barrier to entry for somebody to try it and see if it's for them or not. And it doesn't have to be the flower. So I think that I 100% agree with. And look, long term, I think there's going to be big farm operations. Your 10 and 20,000 square foot grows are not going to be competitive unless it's for a real niche product. You'll still have, just like today, you have small convenience stores and you have 7-Eleven with thousands of stores. Yeah. So I think you'll still see that in the retail side of it. But you will have some 7-Elevens who have large-scale operations with brand recognition across their stores and all that. And then I think it's brands. I think what you're doing at Bold Rose with brands and really trying to build brands. That's one of the winning strategies, and that's why I'm an investor in several of the deals I'm in as well, because I think the brands that stick will have the staying power. Today it's just confusion and there's no real brand. There's some brands that are leading, but that'll settle out too over time, and you'll have Coke and Pepsi and then who's next, right? Right. So everybody has to think about who's next.
Yeah, we think about it kind of similarly. I think cultivation, sort of the raw material side of the business, it's obviously a critical part of the value chain. I think without that, you don't have any sort of cannabis infused products. But it's like any other industry. I think you brought up Coke and Pepsi as really interesting examples. Would you rather be the sort of supplier of corn syrup to one of those companies, or grains for the chips, what have you, right? Or would you rather be the brand that sort of is bigger than any one product and has a lot of intellectual property behind it? And we certainly don't claim to have the answer on that. But if you look at kind of every other industry outside of cannabis, it's tended to be the case that that at least in consumer-facing industries, brands have generally won. Now the key, of course, with any brand is to kind of evolve and stay current, with any trends. And I think big CPG actually does have some of that struggle, right? Where you've got these sort of really large corporations that kind of struggle with their organic growth, whether it's because of the kind of structural demise of really sugary beverages or saturated fats, what have you. And so I think certainly cannabis is a very exciting area, and I agree. I think acquisitions will likely be the sort of the means by which big CPG eventually does get into the industry.
Yeah, I want to respond to 2 points. So on the grow side, just to be clear too, I think there's a ton of money to be made with grow operations for the near term. Yeah. Small or large grows can make a lot of money for the near term. I'm just saying if you fast forward that several years, that's where it starts to shake out. And if you fast forward that a lot of years, that's where you're talking about these. If you look, if there's a hemp investment opportunity I'm looking at right now, and they've got a 1,000-acre hemp farm with these machines that plant things faster than you can walk, and harvesting equipment that vacuum seals and bags it as it pulls the tractor along, right? And you look at this farm. So a big grow operation would be this room, right? Oh, that's a nice grow. That's going to produce a lot of money as it stands today in Michigan, right? That would be, wow, that's going to produce some money. When you look at the pictures and videos of this hemp farm, your eyes would pop. It's just as far as you can see fields of these hemp plants. Fast forward 3 years, 5 years, 10 years, I don't know the cycle, those would be marijuana plants. And the difference there is instead of having a great operator here growing at $400 a pound, $450 a pound. Wow, you're a great operator in Michigan. These outdoor farms are growing for $40 a pound. Yeah. Right. So, and again, it's not the same quality. It's not apples to apples, but that'll drive the overall price down of everything else. So that's on that side of it. On the CPG side of it, I wholeheartedly agree on that too. And there's from an investor perspective, the big syrup companies that supply Coca-Cola, guess what? They still make money. Coca-Cola obviously makes money, and they probably have the highest return on invested capital, right? It's because they're selling licensing deals. The bottler still makes money. 7-Eleven still makes money selling their products, right? So there's value at each one of these steps, and there's investment opportunities each one of these steps. You just got to separate you got to think past the hype right now and the today from what's going on, and think about what's 2 years, 3 years, 5 years looks like from an investment horizon perspective, because by the time these things get spooled up the next couple of years, that's when it really matters from an investment perspective, not what happens right now.
Yeah, I mean, I think timing is as with anything, it's everything. And we sit at a really kind of nascent stage here in the Michigan industry to where, yeah, I think I agree with you. And I think there could be a lot of lucrative outcomes in the cultivation space. Colorado is an interesting market to take a look at, because I think if you were to sort of get into that world, when it went legal, that was a time when the wholesale price of cannabis was something like $3,000 or $3,500 a pound, and we're well under $1,000 at this point. So if you were sort of involved then and had an operation up and running, and you sort of saw where the puck was going, I mean, I'm sure you did incredibly well. You know, and if you kind of acquired an operation at that point in time, then you've sort of seen the ride since then. It's been tough. So yeah, I mean, I think you're right. Timing is everything on that side of the business.
Yeah, and even in Michigan today, again, it's to finish up on the grow, because that drives pricing on all of it. Today the prices of legal marijuana are going up very rapidly because of the huge shortages of supply in Michigan. How many of you in the room know personally about a grow that's about to come online with more product? Right? Almost everybody in the room, right? And that's what's going to happen. So it'll go up a whole lot for a while. It'll stabilize a bit. You're going to have people who don't know what they're doing and shake out a bit. Then the price is going to go down like it has in every other mature market. Again, it doesn't mean there's not profit there. It just means it's not going to be the crazy profits you have today.
Yeah, completely. I guess you live here in the Michigan market. We obviously are very involved in it. Any surprises that have kind of come across your plate?
You have to turn off the cameras for a couple of them. But yeah, just probably the biggest one is just be careful you work with. There's a lot of people who talk a great game. They really present themselves as one thing and they're another. So that's very true, and I think all investments, investor beware and all that stuff. In the cannabis industry, I would put like 4 exclamation points on it. Just the people who were brave enough to get in the industry early often did it in very gray market conditions, gray area conditions, and many of them are less than reputable. So I would keep your eyes wide open for that. I came from the corporate world where if a customer or a business partner told you something, it was substantially true almost all the time, right? They might have a marketing factor or some exaggeration to it or something, but generally you could count on those things being true. That's not the case in this industry at all. So I would just say you got to filter a lot more carefully in terms of who you're going to work with and how it works, and do a lot more vetting before you commit to anything would probably be my biggest thing. Yeah,
that makes sense. I think for us, one of the interesting things about, again, just to stay on topic with the brands, is that if you look at the rest of the world, you can create a consumer brand. There's a lot of sort of direct-to-consumer brands out there where you have sort of a cool idea, right? I'm going to reinvent sort of the glasses category or luggage, and you can sort of imagine which business I'm discussing. And it's really about driving kind of a really innovative, sales and marketing-oriented organization around e-commerce, and maybe you don't even actually manufacture your own products, right? What's been so fascinating for us in this industry is that manufacturing is a really big deal, right? Because with the lack of sort of interstate commerce due to federal illegality, if we have a brand, for example, when we expanded into Michigan, it's not like you can just manufacture products in the state of Colorado or California and export them over here. You got to come over here and make your own.
Although there's some people who are doing that.
Well,
illegally.
Yeah, that's a whole different topic, right? So compliance and safety, and just sort of at least at the state level being compliant with all the regulations. We care deeply about that, to say the least. But that's been the really interesting thing is that I've kind of come from this investor perspective of the rest of the world where consumer brands can be pretty capital light and you can get them off the ground without a lot of money. And I think to be truly successful in this industry, it's proving to be a much more capital intensive space than certainly I originally thought it would be.
Mm-hmm. Yeah, agreed. And that's where, again, I think if you look at the, if I ask you guys what are the cannabis investment opportunities, a whole lot of you just write, grow, sell, process, right? That's where all these ancillary things kick in as well, because there are plenty of business models out there that are very capital efficient. Not all of them. Again, a lot of them, like Grow's a great example, right?
Yeah.
Can't really put a lot of debt on the real estate. It's hard to get financing for real estate. So you got to buy the real estate. You got to pay for all the build out, pay for all the lights and all that stuff, and then you start to get some cash back. So it's very front end loaded on cash, and processing like that and some others. But there's slices of the market. There's investment opportunities that are very capital light. Coca-Cola, for example, is everything sits to Coca-Cola, right? Well, there's the bottling companies that bottle it. There's trucking companies, right? All these things, just if you look at Coca-Cola and their ecosystem, it's the same thing here too. I mentioned that one of the deals I'm in is at Slang. They're a packaging and licensing company in a certain degree. They process and manufacture themselves as well, but they're able to really extend their capital because of the aspects of their business model where they're not trying to open stores and grow operations, for example. They're focusing on the part that they feel has the highest scalability as a consumer packaged good. So, I think there's different business models that can be more capital light.
Yeah.
But I would say also for most of the businesses, Saad is correct. They're capital intensive, and I would say much like most new businesses, they're going to cost more than you think they will, and they're going to take more time than you think they will. If you want 2 takeaways as an investor, write those things down. Right? Those are guarantees. Right? It's going to take more money and it'll take more time than you think it will to get whatever the operation is up and running.
Couldn't agree more. Yeah, on the brand side, we've really endeavored to try to get into as many states as sort of prudently possible over the time. So like Slang, we have a brand platform company called BR Brands. There's 4 brands on it. Mary's is kind of the cornerstone brand of those at the moment, and we've had the good fortune of getting into 11 states at this point. So I think that makes us one of the, if not the largest, kind of brand footprints, anyways. But that's kind of how we've sort of played our chess pieces, so to speak. We have not really gone into kind of the retail, the model or sort of cultivation. And for us, I think there's been sort of the option of, I guess, kind of building your own infrastructure. And I think we've looked at sort of the largest states, right? Whether it's been certainly Colorado or California. We've got a great partner here in the state of Michigan that we've got a good relationship with, and so we haven't had to build our own facility here. Who knows what the future brings, but we've got a really good partner today. So it's there's lots of different ways to do it.
Well, that's an interesting point on the partnerships too. If you look at what's going on from the call it the big guys, right? The Slangs, the Marys, the bigger brands that are multi-state brands. Often, as they're entering the market, they're doing partnership deals. So that's another, I guess, aspect of the investment opportunity. Often, they're in the same boat as any Michigan-based company would be. Even the big guys can't borrow money. It's few and far between that have good sources for debt. So what they have to do is really everything they can to extend their capital. And that's where some of these creative licensing deals comes in, or leveraging somebody else's infrastructure as a joint venture opportunity where the local operator owns a piece. And although I think the bigger brands are already in Michigan in terms of, I know Mary's in Michigan, Slang's in Michigan, there's a whole bunch of those kind of next tier brands that haven't got partnerships in Michigan yet. So that's an investment opportunity for those who are looking for them.
Yeah, I agree. I think the partnerships are definitely an easier way to get into a state. You can you can spend a little less capital, and as we all know, capital is it's valuable in any industry. It's particularly tough in this one with the absence of kind of traditional banks and mutual funds and all the usual providers of capital. So the key with any partner, of course, is you just have to make sure that your SOPs are being observed properly, and that if you have a Mary's patch, for example, in the state of Colorado, it's got to be kind of the exact same as the one that you buy here. And like I said, I think having really good partners, we've been fortunate to have, I think makes that possible. But I think for any brand that's looking to kind of expand beyond its first state or two, that's just it's a critical thing that you have to keep an eye on.
So we have, our lives were threatened if we go over on time, so we have a couple of minutes left. So I guess maybe we can end on, if you had to fast forward 5 years specific to the Michigan market and investment, you've got half the time slot to dive in.
Well, I'm excited. I think that we've obviously kind of had the big hurdle of the legalization move, and now it's just a question of, I think the licensing process begins, end of this year. So we should see some stores potentially open up, certainly by early next year, if not that. And what I'd love to see is just sound regulations. Over the next the next 5 years, I think in California we've seen some really good attempts at good regulation. But there's issues, right? Like with the implementation of metric, that's been challenging, and I think on the distribution side, there's a 3-tier model there. I think we're still early days here. We'll see ultimately what Michigan evolves to, but I just hope that everything is done with not only in mind towards kind of safety and compliance, but also just making sure that things are commercially kind of fluid and customers have access to product and don't have bouts where they sort of have store shelves that don't have any product because XYZ regulation changed overnight, which seems to happen in certain other states quite a bit. So just kind of a fluid market. That's sort of our hope.
Yeah. And my perspective, I think there's going to be a lot of winners and losers. I think probably, like just being my personal opinion, I think there'll be more winners than losers. I think in the short-term game, the next few years, just because gravity's working with them. You got to when recreational kicks in, you're going to every other state that double or triples the market size. So you're going to have an immediate lift for everybody involved in the near term. What happens after that is the real key. Many of the operators now are all about. I mean, especially a couple of the high-profile public companies are they're famous for having first user capital to buy private jets and so on and so forth, right? You got to make sure that the operators are going to deploy the capital properly, take these short-term windfalls and really do something with them, or at least give you your money back. And then I think there'll be a lot of winners. I think Michigan's going to end up being a one of the top couple of markets in the United States.
Definitely. And
I'm very, very bullish on the market and all the opportunities that creates.
Yeah.
Thank you all very much.
Thank you.